SoFi CEO Anthony Noto has expressed a great deal of optimism regarding the company's future, and his positivity is not without reason. In the most recent quarter, SoFi experienced accelerated revenue growth and notably achieved another profitable quarter. The company's non-lending operations, which are growing faster than its traditional lending business, are helping to reduce risks. This diversified growth has boosted confidence in SoFi's outlook, especially as U.S. unemployment remains low and interest rates are showing signs of decline. The Federal Reserve has initiated interest rate reductions, easing economic pressures and calming recession fears. This favorable macroeconomic climate is one of the key reasons the CEO is so confident in SoFi's path forward. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. During the latest earnings call, Noto remarked that the company's performance under challenging conditions has reinforced his optimism. He noted that SoFi now faces fewer obstacles than ever before and emphasized that 2025 appears to be set up as one of the most promising years in recent history for the company. SoFi's most diverse business portfolio to date, a larger ecosystem of members, and an increasing array of financial products add to the company's momentum. The CEO highlighted that SoFi has a broader selection of offerings to meet customer needs than at any other point in its history. 2024 brought initial worries of a recession, largely due to the Federal Reserve's aggressive interest rate hikes aimed at containing inflation. By raising interest rates, the central bank sought to cool down economic activity by making credit more expensive and, in turn, discouraging spending on high-ticket items that require financing, like homes and cars. This strategy, aimed at controlling inflation, limited economic expansion as intended. But now, with inflation nearing the Federal Reserve's 2% target, the central bank's focus has shifted to addressing slower job growth. With job expansion significantly cooling over the past 6 months, the Federal Reserve has taken note and adjusted its approach by lowering interest rates to avoid negative job growth. As the central bank continues to reduce interest rates, SoFi stands to benefit in multiple ways. Lower rates encourage consumer lending activities, a core part of SoFi's business model. Reduced rates could boost demand for SoFi's home loan and personal loan services, as borrowers find these options more attractive. Furthermore, if economic constraints are eased without a corresponding increase in unemployment, SoFi's existing loan portfolio could face fewer defaults, which lowers risks and improves performance. This stability, combined with income from SoFi's diverse revenue streams, positions the company favorably as it heads into the upcoming year. Notably, SoFi was among the more cautious financial companies at the start of 2024, anticipating a high likelihood of recession. However, with economic indicators improving and recession fears subsiding, SoFi's management has become more optimistic. The company has started talking about the large and often underserved market for consumer financial services, a sector ripe for disruption and better service. While some segments, such as credit cards, are relatively well developed, other areas like home loans and personal banking services remain clunky and less consumer-friendly. SoFi sees opportunities to improve these segments, particularly in the home loan market, where application processes can be slow and cumbersome. Traditional banking services, particularly at local branches, have struggled to keep up with evolving consumer expectations. Customers visiting these branches frequently encounter long lines, reduced staffing, and decreased service quality. This trend has intensified as major banks like Bank of America, JP Morgan, and Wells Fargo continue to streamline branch operations, often resulting in fewer tellers and empty desks. As physical branches decline in service efficiency, SoFi's digital-first approach becomes more appealing to consumers. The convenience of having a wide range of financial products, from loans to investments, managed on a single digital platform, aligns with modern consumer needs. SoFi's approach meets these needs effectively, leveraging technology to streamline the experience. SoFi's comprehensive approach to banking, where customers can access everything they need on one platform, offers a significant advantage. With the growing frustration many people feel from managing multiple accounts across various financial institutions, SoFi's one-stop shop model is becoming increasingly attractive. People no longer want to juggle multiple accounts for home loans, personal loans, investments, and checking accounts. As this trend continues, SoFi's model stands to gain even more traction as it alleviates the headache of fragmented financial services. This centralized approach has led some industry experts, as well as the CEO, to predict that SoFi's growth could eventually position it as one of the top 10 financial institutions. SoFi's ability to address a wide range of financial needs from one platform could be a game changer, particularly as traditional banks continue to cut back on services at their physical locations. However, there is still a possibility that some brick-and-mortar banks may realize their strength lies in community engagement through local branches. Should they decide to reverse course and enhance their branch-based services, SoFi might encounter a competitive response. For now, however, most large banks seem to be moving in the opposite direction, consolidating and reducing local branch services, which only strengthens SoFi's digital advantage. Looking ahead, SoFi's growth prospects appear strong, with both short-term and long-term factors working in its favor. The company's all-in-one model not only reduces the hassle for customers, but also drives loyalty, as users can manage most of their financial needs within SoFi's ecosystem. This focus on customer experience, combined with the favorable macroeconomic environment, positions SoFi well as it seeks to capture a larger market share in 2025. The CEO's optimism is well-founded as the company continues to scale up and leverage its digital-first approach to disrupt traditional banking sectors. In conclusion, SoFi CEO is understandably bullish on the company's prospects. SoFi's digital banking platform, diverse product offerings, and consumer-centric approach provide it with distinct advantages. As long as traditional banks continue to reduce services at local branches and maintain a more fragmented approach to financial products, SoFi is well-positioned to capture more market share. While the company's success depends in part on continued favorable economic conditions, SoFi's strategic positioning and service model give it a competitive edge in the evolving financial landscape. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.